morning, students. Hope you're doing well. Today we're starting with a new chapter, that is chapter number 7 of your book, Capital and Revenue Expenditures. What are capital and revenue expenditures? We'll look through them separately. First, let's understand what is capital expenditure. Capital expenditure is an expenditure which occurs when a business spends money either to buy fixed assets or add value to the value of an existing fixed asset. So what did we talk about here? We said when you purchase a new fixed asset for the company or your house even, or you add value to an existing fixed asset, we classify it as capital expenditure. What is a fixed asset? I hope you all remember the things we own, the things we control, and the things we can sell for money later. For example, your premises, your equipment, your vehicles, motor cars, etc. And what do we mean by adding value of an existing fixed asset? It means, let's say, for now, our school building does not have a swimming pool, and we decide to add on a swimming pool to our school building. So, what do we call it? We say that now the value of our school building has increased. When the value of the school building increases by adding the swimming pool, it means the value of your building increases in general. So we call it capital expenditure. What are the things included in capital expenditure? Now, when you calculate the cost of capital expenditure, we say it is the cost of acquiring fixed assets. It means the money you pay upfront. Then, bringing them into the business. What does this mean? This means we are talking about the delivery costs. Delivery costs, for example, okay, I'll give you an easier example. When you order McDonald's and you pay for the Mac chicken meal, do you only pay the McChicken meals cost, or you also pay the delivery charges to the delivery boy? Yes, we pay the full amount. That is, adding the 5 dirhams as a delivery cost to the cost of the meal, and then we pay our bill. So it means the cost of the delivery was included in the cost of the burger we ordered. Hence why we say when you acquire fixed assets, you also add to it the cost of bringing them into the business. So both of these are components of your capital expenditure. Third, legal costs of buying premises. So boys and girls, when we buy new premises, we have to get done with the paperwork. Paperwork means, you go to the registrar, you go to the municipality offices. There's a lot of paperwork that needs to be completed once you buy a premises or a building. So those legal costs will be included in the capital expenditure. So your building not only includes the cost of acquiring the building, it also includes the cost of bringing things into the building and the legal costs of buying premises. Then carriage inwards. Carriage inwards is again the cost of transport or machinery or equipment purchased. So again, carriage inwards is related to bringing the goods into your business. The third one, any other costs needed to get the fixed asset ready for use, that is installation costs. So when you purchase, let's say, a projector for the school, we have projectors in our classrooms. We know that those projectors cannot be installed by us. We need specialized people to come and install it for us. And a lot of companies offer such installation services. Like for instance, in your daily lives, when you order for a TV, the company Samsung will send its employees to come help you install it, make it in a running position. So those are the costs known as installation costs. So installation costs are included in the cost of the asset you purchase. Why do we call it? Why do we say these are included in the cost? Because what you are paying upfront in the acquisition of a new asset, all of those costs will be called capital expenditure. Moreover, This happens in your daily life as well. When you go order something new, for example, a washing machine or a television, or that's all that I can think of as of now. So when you buy these things, a lot of times the companies say it's free of delivery. So it means the installation cost will be occurred by you, and it will be included in the cost of the fixed assets that you purchase. Okay, I hope capital expenditure is clear. Don't worry, even if it's not, once we move on to the revenue expenditure and then examples will be more clear. Just for now, you should know that it is the cost of buying fixed assets and adding value to the existing fixed assets. Now, revenue expenditure is the second part of the chapter. What are revenue expenditures? These are the expenditures that these are the expenditures that do not increase the value of fixed assets, but are incurred in the day-to-day running of the business. So these are the expenditures which are incurred on a daily basis to run our business operations. For example, the cost incurred in acquiring a motor car. When you buy a new motor car, it's going to be your capital expenditure. But the cost of the petrol used to run that vehicle is revenue expenditure. I hope that makes more sense now. So when you buy a new fixed asset, it is capital expenditure. But when you're actually spending money on running the fixed asset, using it by paying the cost of the petrol, in this case, we call it revenue expenditure. Moving forward, what are the differences between capital and revenue expenditures? Revenue expenditures are the day-to-day expenditures and charged to the profit and loss account. What is a profit and loss account? It's a statement you're going to learn in grade 11, where we're going to learn how to make the profit and loss accounts. That is a statement showing how to calculate the profit or loss for the business. And capital expenditure, in result, leads to an increase in fixed assets. So capital expenditures go to our balance sheet. What is a balance sheet? It is simply a depiction of your accounting equation. I hope you remember the accounting equation. A equals L plus C. So assets equals liabilities plus capital. So it means our assets are coming from two sources of money. Our money, capital, borrowed money, liabilities. So the depiction of this accounting equation is what we call as a balance sheet. It is also a statement which is prepared after the profit and loss account is prepared at the end of the year. Okay. Now capital expenditure, since it results in an increase in the fixed assets, so we're going to include them in our balance sheet. But that does not concern us for now, so let's move back to our topic. Now, what are the examples of capital and revenue expenditures? Now, if you look at the exhibit here, the first one is purchase of plant and machinery. So it means you're buying a new asset, that is plant and machinery. Which plant? Yes, the factory plant. Revenue expenditure is painting of an old machinery. So what are you doing here? You are just maintaining your old machinery. You are not buying a new machinery. So painting comes under revenue expenditure because this is a task that needs to be carried out on a regular basis. Second, installation cost of plant and machinery. So it means when you buy a new plant and machinery, the installation costs have to be paid along with the cost of that machinery. So this is included in the capital expenditure. Revenue expenditure, on the other hand, can be the repairs to those plant and machinery which you purchased earlier. So repairs and maintenance is a regular part of your job. You have to do it on a day-to-day basis. Third, additional purchase of an asset. So now let's say we already had 2 cars in the business. Now we buy the third one. So we have 3 cars. Increase in an asset. Increase in an asset is going to be classified under capital expenditure. Then the cost of petrol or diesel used for machinery. So now you're running the machinery, you need to pay the petrol or diesel as a daily expense. Then cost of extension to a building. So let's say we have our school building. Everybody knows what a school building looks like. The principal, he decides to add another wing. So it means you are extending your building. So that is capital expenditure. The value of your building is increasing. But cost of maintenance of a building, painting, cleaning, doing the repair work. That's it, revenue expenditure. Then cost of increasing the number of seats in a cinema theater. So if a cinema previously held 100 seats, now there are 250. Increase in the number of seats means capital expenditure. Sorry for that. Okay. Cost of painting and cost of repairing the existing seats in the cinema theater. So the existing seats you have, you're just maintaining them. You know, the broken ones, just fix them up. That comes under revenue expenditure. Cost of painting a newly constructed building. Now, guys, you need to pay attention here. We talked about cost of, painting of an old machinery. This was classified under revenue expenditure. But the cost of painting a newly constructed building comes under the capital expenditure. Because look, when you are acquiring the asset for the first time, or building the asset for the first time, the cost of painting and decoration and all, they come under the capital expenditure. So cost of building an old building, same, revenue expenditure, it's routine business. Cost of painting a new constructed building is not routine business, you're painting it for the first time. Then cost of construction of additional building. Again, you're adding value. Cost of building. Existing building comes under revenue expenditure. Carriage incurred for the purchase of plant machinery. What, guys, what is carriage? Carriage is basically the cost of delivery, the cost of bringing something into your business. Okay, so those are your expenses, but we deal them under capital expenditure because you are buying the machinery for the first time. Then comes your revenue expenditure, which is repairs, renewals, and maintenance of assets. These were few of the examples that you can go through again in order to clarify your concepts on capital expenditure and revenue expenditure. Now, let's quickly do this activity together. So, motor van, you're buying a motor van. This would be your capital expenditure. Redecorating existing offices. Are you decorating your new offices? No, we are redecorating existing offices. So, this is revenue expenditure. Installation of new machinery. The word new should give you the hint. So, it means anything new has to go with the capital expenditure. Extension cost of new offices. Again, this is the cost of new offices. So you are increasing the value to your current offices. So capital expenditure. Redecorating existing offices. Now you are redecorating your existing offices. So it means there's nothing new being added up here. It's routine business. So it means revenue expenditure. Then electricity costs of using machinery, revenue expenditure. Why? Because this is routine business, cost of maintaining your existing machinery. This comes under your daily expenditure. Now what I want you to do is, please go over this with you again in order to clarify your concepts on capital expenditure and revenue expenditure. And please do this exercise again by yourself at home. Thank you for listening. Bye.